Hi, guys. My favorite day of the week is Tuesday because that's when I get to talk to you. But, there's so much that's going on. I'm going to want to expand our discussion, and I want to hear what you think because, we have to have this conversation. Obviously, today we're going to be talking about the Bitcoin, the crypto reserve that they're putting in. And what I'm really always trying to do is give you everything that I read because I read on both sides of the aisle. I'm not political. I'm all about economic. Does this make sense? I mean, you guys know how I feel about Bitcoin. Here it is, and it's gold. It's not really gold, but it's definitely not as heavy. You can tell the difference. But some things do make a lot of sense, other things not so much. But the working group shall evaluate the potential creation and maintenance of a national digital asset stockpile and propose criteria for establishing such a stockpile, potentially derived from cryptocurrencies lawfully seized by the federal government through its law enforcement efforts. Frankly, this to me makes a whole lot of sense, believe it or not. But it's that potentially piece that could be a little problematic. You always have to wonder when they write these things, they typically will write them in a way that gives them a whole lot more leeway. We'll just continue because part of what you have to look at is who benefits most from this creation. So remember, if you want these links, we have all of these links below and also on the blog or no? On the blog. But we have all of the links below anyway. And this is the government's stockpile of cryptocurrencies. Now, look, they've got about a little bit more than 17 billion in there. And by a wide margin, wide, Bitcoin is what they have the most of. Next, I think it's the Tether. The US dollar, the stable coin would be the second, but it's so far below what they have in Bitcoin. So let's just keep going. Does it make sense to manage the seized cryptos? 100% it makes sense to manage these. But there is the difference between a stockpile where you're just kind of accumulating them and a reserve, which kind of makes you think that they're going to do something with them. So let's just keep going on because honestly, I think it makes sense. They're doing that anyway. They might as well have somebody that knows what they're doing in there managing these crypto assets or instruments, whatever you want to call it. But when this was first announced, the market capitalization of the entire global cryptocurrency industry rose 329 billion in 3 hours. Can this really be the foundation for sound money, that level of move, because they're told that they're going to be creating a new reserve system? President Trump also listed XRP, Solana, and Cardano as 3 coins that would be included in the reserve. And then he also said, I love Bitcoin and Ethereum, and said those coins would also be in the reserve. He might have misspoke a little bit because it probably should be the largest. But if we're just using the seized cryptos, okay. The posts also demonstrated in real time the depth of influence he has over a multi-trillion-dollar industry that just a few weeks ago was a target of government suspicion, not support. But I want to take that like a huge step forward on that because this is a market that just started being created in, let's see, when was that? Oh, January of 2009 was when Bitcoin was born. Although the NSA, which is a government agency, did propose it back in 1996. So this is something they've been working on for a while, which is why I think that it's a Trojan horse. But we'll be talking more about that. At any rate, what you're looking at here is risk on, baby. And that's really been the climate. It's not been the reaction, but that's been the climate. Lots and lots of risk. Well, what happens when you have lots of risk? Things can be at jeopardy. So if you haven't done it yet, You click that link below or you scan that QR code and you make an appointment with one of our strategy specialists to set up your own sound money strategy. It's just based on those repeatable patterns, and you need to get it done ASAP because lots of risk is out in these markets. So as the White House prepares for the crypto summit, billionaires and industry leaders are attending. And, who are they going to set this thing up for? Your benefit or their benefit? Just saying. The mere prospect of the government speculating in the crypto market is already enriching the small share of Americans heavily invested in these assets. Yep, for the taxpayer, the purpose of such an initiative is obscure. The crypto industry is a hyper-speculative casino. It is not essential to the American financial system, nor are cryptocurrencies essential to the American public. But I will also say in here that the entire world is adopting cryptocurrencies. What I don't know, and the reason why I don't have any of these yet, is because I'm not quite sure who's really going to survive this. They are about to be tested, and we're going to know who's going to survive. I'm sure some will. I mean, they put them in the Bank for International Settlements. Excuse me. Sorry about that. They talk about that in the money flower, and there is a little teeny place for private cryptocurrencies. We also know that Europe is coming out, they say, by October with a CBDC. Now, I do like that President Trump has said we will not have a CBDC here. Maybe that's true, maybe it's not. Time is going to tell us about that. But some of this makes a whole lot of sense to me. I always love the graphics, though. Oh, my God. They do this in gold because they want you to think that this is digital gold. Just like the SDRs, which I'm going to show you in the next piece, they classified as paper gold. Yeah, guess what? There's no substitute for real gold sound money. They have tried and tried and tried in the lab and in these different ways, and it really has never worked. Hold it, own it, have that as a foundation. Then whatever the markets do, the markets do. But here, Ripple, $50 million investment fuels new national cryptocurrency association for consumers because they want to get more Americans on board. They need that adoption. Maybe they already have enough adoption. We're going to find out. But Ripple continues to push for mainstream crypto adoption, and the CEO stated that the opportunity for crypto in the U.S. has never been stronger. And I agree with that, and I'm also going to say I don't think I've ever seen it stronger for actually having a sound money foundation in our new currency. So I agree. This is the opportunity. This is the opportunity. But sound money is proven. Cryptocurrencies are not yet proven. Can they stay around with the support of governments? Of course they can. The company has made significant investments in political and regulatory efforts recently, including a $75 million contribution to the First Shake PAC to support Donald Trump's 2024 campaign. Now, do you think with a $75 million contribution that might gather some ears and some support? Even though Ripple still faces an ongoing lawsuit with the SEC, which has yet to be resolved, for selling their coins not as investments, not registering them properly. So we'll see what happens with that. Probably nothing, to be honest with you. But this is pretty significant, and we've seen it. This is not the first time. By the way, crony capitalism has been around for a really long time, by the way. So if you do make a significant contribution, that's how you get politicians' ear. That's how lobbyists do it. That's how corporations do it. That's what we're trying to do, even honestly with the sound money movement, is we've got to get the ear of the politicians so that we can get it registered in the states and have some movement in that end. So it's disgusting, but the reality is you have to pay to play. If you really think that those officials, the elected officials, are there for your benefit, I wish I could say that I agreed with that, but I don't agree with that. But why are cryptocurrencies always either gold, silver, or platinum? Because they're trying to gain your confidence. This too requires your confidence, especially since you're never going to have that understanding unless you are a specific kind of engineer, which personally I am not. But White House crypto and AI advisor David Sachs supports the IRS broker rule repeal. Now, we do know that there are going to be a lot of rollbacks of regulation. And again, it's not that I'm opposed to it, because a lot of it, it's not even when the Congress actually votes on these new laws or these new rules, most of them haven't even read them. And those rules are left to be developed by others that are not elected officials. And the Dodd-Frank Act, frankly, is a great example of that. That started to be dismantled during Trump's first term. And I agree with a lot of that, but I also feel that we do need investor protections. And so you have to be careful of what you ask for. And there are pros and cons, and it kind of depends on what that deregulation is. That's why it's so critically important for you to have your sound money strategy and become your own central banker, and make sure that you have security in food, water, energy, security itself, barterability, wealth preservation, community, and shelter. It's critically important. But here's some key takeaways. U.S. lawmakers are challenging the IRS broker rule, arguing it imposes excessive compliance burdens on DeFi platforms. DeFi is decentralized finance and stifles cryptocurrency innovation. So they have to create all of this, but then the public is exposed to anything that might possibly go wrong. That's where I have a problem. Senator Ted Cruz and crypto advocates aim to overturn the rule, Senator Ted Cruz and crypto advocates aim to overturn the rule, which critics say misclassifies software developers and infrastructure providers as brokers. So that means a lot less oversight. The congressional vote on this regulation could shape the future of decentralized finance, DeFi, and digital asset policies in the U.S., with broader implications for crypto regulation. So, these things are coming out. We're looking to put in some stockpiling and different things, but there's a lot that's not known. It's more experimentation, fewer regulations, and what does that do for you? It puts you right in the crosshairs, because when this next financial crisis becomes apparent to everybody, all of your choices are gone. U.S. Senate expected to vote on erasing IRS crypto broker rule that threatens DeFi. Well, interestingly enough, the recent IRS rule that makes hefty disclosure demands of decentralized financial projects is heading for a U.S. Senate vote this week that aims to scrap it. Republican U.S. senators are pushing to get rid of two recent federal regulations tied to digital assets, also including the Consumer Financial Protection Bureau, which is gone anyway, the CFPB, rule targeting major tech companies that offer payment apps and digital wallets. It's convenient. Yes, it is. But I don't know, what could possibly go wrong? Let me remind you what could easily go wrong in Synapse. We've been talking about it. I've been keeping you updated on it. Synapse is a DeFi. right? They haven't changed those rules. Now they're talking about, that's why the collapse of it is why they were putting these other disclosure rules in, so that, well, I'll come to that in a second. But here are, for those that participated in Synapse, a DeFi, 4 reasons why banks are unlikely to make Synapse end users whole. Well, consumers who use fintechs like Yoda and Juno, maybe some of you guys recognize these names, have not had access to the money they had in those accounts since Synapse, a company that connected fintechs with banks and was supposed to track account information, filed for bankruptcy in May, though the 4 banks involved had made some partial reimbursements. The FDIC's deposit insurance fund cannot be used for this purpose. In Synapse bankruptcy hearing last week, a Yoda customer said she thought the savings fintech and its bank partner were FDIC insured. So why doesn't the deposit insurance kick in? FDIC insurance will not play a role here, will not make you whole. The only time that FDIC insurance pays out is if a bank fails, not a financial technology firm. And they couldn't track where all of that money went. So there's still $65 to $95 million that are absolutely unaccounted for. I've been keeping you guys abreast of this the whole time. Maybe we can create a little series so that you can go back and watch the evolution of this crisis, right? Because it's important that you understand this, especially in the direction that we're headed, because this is speculation. It is. It's not real yet. Central banks. So I updated this graph. So through 2024 and certainly into 2025, central banks are continuing to buy gold. Now, look, this is 1950 when the world was on a gold standard, and you can see how much gold central banks were buying. You can also see when they were selling to try and control it wasn't the visible gold price because we were still on the gold standard, but there were 2 different gold prices that were running. They were the official number, which was $35 an ounce, although they did increase it to $38. And then there were the private markets that were substantially higher than the official markets, which is what we are going to find out again when they revalue this garbage against sound money gold. We will see that again, but it'll go up so much higher. I want also for you to note, this is 1971. That's when Nixon took the world off the gold standard. Now, obviously, the whole world didn't go off immediately. Switzerland, which is why a lot of people still think that the Swiss currency is backed by gold. It's not. They stopped that in 1978, but they were the last country to do so. So you see, all of this is selling the gold or leasing it out in order to control the visible price that you see to keep you away from it. Because once you hold it, you own it outright. It runs no counterparty risk. It's decentralized and it disappears. But I want you to note 2008. This is 2008. Look, central banks stopped liquidating so much gold in 2005. Do you think they saw that the system was overheated and that there was a problem on the horizon? Because I remember 2007, and I believe it was July 9th. I could be off by a few days, but I'll be pretty close on that. That's when the dollar fell to an all-time low against its trade-weighted baskets. For me, that's when I started telling people something very nasty this way comes. It didn't become visible till a little bit more than a year later. And that was when the public knew about it. And I was talking about it right throughout the rest of 2007 and entering into 2008. But the public didn't know about it until September of 2008. And then it was too late. All choices were lost. When do you want to know? And you can see where we are right now. This is through 2024. And look at the last 3 years. I mean, to me, that says everything. I don't even need words. I can see it all in this graph. Central banks are trying to protect themselves. There's a big reason why they're buying the most gold since tracking began. And it's a simple reason. It is simply because we are at the very end of this currency's life cycle. I've shown you that my favorite chart, the purchasing power chart, right? Why? Because that shows you that there is officially 3 cents left. It's really about the confidence in this system. I do believe that we are going to see very high inflation very, very soon, maybe before June. Maybe it'll make it to June. I don't know. We're going to find out. But it's the public confidence that's holding this whole system together. So I want to continue with this, but I also want to show you, I pulled up some charts from yesterday because I want not just your questions, but I want your input too. I want to make this more of a conversation than just a Q&A, if we could do that. So this is the NASDAQ, the tech stocks, and you can see where it peaked here, and hasn't taken that long because that was just in February to where we are in correction territory. And yesterday was a particularly brutal day, dropping 4% in that day. I'm hearing the talking heads, Bloomberg, etc., likening this to what they saw in 99 when the tech bubble burst then. And it took them 25 years to recoup. This is much bigger than just a tech bubble. I'm telling you right now, 100%. But the other thing that I want to point out before I move to the next slide is I don't see any gaps in here. So usually when I see a gap and I tell you, okay, well, the price, at some point, it's so simple. At some point, all gaps get filled. So that would tell me that it would push the price up. I don't see any gaps. Just saying. I'm not saying whether gaps are good or bad. I'm just saying there are no gaps there. All those prices were filled all the way down. This is the Standard & Poor's 500. Kind of the same kind of action. This went down 2.7%, but still a very, very tough day. And it's not just one day. This looks more like a trend. And this is the Dow Jones Industrial Average. You're seeing the same kind of thing, right? The same kind of thing, although that went down a little bit more, 2.08%. So what I'm showing you is what's happening in the stock market. This is the Treasury yield, right? That too peaked over here back in January and has been declining ever since. Now, is it declining because the economy is getting so strong, or it's just the opposite, right? We're getting an awful lot of signals that talk about a very weak economy. And so that's really what's reflective in these lower interest rates. This is the 10-year Treasury. This is the foundation of the global financial markets, and it does not look very healthy to me. So we'll just have to keep waiting and watching. And we have had a reinversion of the yield curve. I think I told you about that last week with a 3-month and 10-year. But we'll have to see. I mean, when is this recession going to be obvious to everybody? Very soon, I think. So this is spot silver. And you can see it dropped a little bit. It dropped 0.85%. So, and then I'll go on to spot gold, which dropped 0.5%. So when you're looking at this, if people have bought stuff on margin, so they borrowed money to buy stocks or bonds or whatever they borrowed money for, and those drop that precipitously, they're getting what's called a margin call. And in a margin call, they have to sell whatever the market will bear. So that's why you're seeing, yes, they pulled back a little bit. They moved up, I think today, at least when I looked at it early this morning, it still looked very mixed. The signals looked very mixed, but you did have spot gold up I think it was like 20 or 30 bucks when I saw it, and spot silver up and the NASDAQ up like a little bit. So the question really is, how do you feel about what's going on? Is this having an impact on your anxiety? And if you are feeling anxious, let's talk about how you can alleviate that anxiety. Because a lot of what's happening in this back and forth with the tariffs and all of that, and the markets being whipsawed, all of the markets, I should have pulled Bitcoin, I didn't. Sorry about that, but I think that also corrected pretty substantially. When I saw it, what was it, something like 82,000 or something like that? 78,000. Okay, that's a pretty significant correction. It hasn't passed a test yet. It really, really hasn't. So we're going to see what that looks like. But what is it?
It went down at 76 and bounced back at 83.
Ooh, okay. Where's spot gold? Can you tell me?
Yeah, I can tell you. Give me 1 minute. I'm going to lynettzang.com.
Yes, because we have it on there. And it does say spot, because I want you to understand that does not reflect the true fundamental value of gold or silver. And actually, wherever it is, it doesn't matter, because they only want you to think that gold is competing.
2,919.
2,919 still doesn't reflect the fundamental value, but they want you to think that this is the same as this. It's not. What's the difference? This is used in every single sector of the global economy, and it runs no counterparty risk. This is used in one place in the global economy, and just at least at this point, just as a tool of speculation. That's it. So we'll start with questions, but please type your comments in the comment section, because we're going to talk about those too. And in this space, I am not getting political. I'm not telling you that what President Trump or even Elon Musk, whether I agree or I disagree, is not the point of any of my work. The point of my work is to help you get through this currency life cycle regime shift. That's what my focus is, because no one person created this mess, and no one person can get rid of this mess. And we've got to have a huge crisis in order to move forward into the new system. So I think this is what this is ushering in, quite honestly. And that's what I've always felt. So that's what I'm talking to you about. I just hope that this area doesn't get political. If we can keep it economic, that's the best place to be, because that's what's going to impact you the most. So Wolf says, who is our 37 trillion debt owed to? China, and who else? Well, a lot of it happens to be owed to Social Security, actually, and a lot of it, 35 trillion or 37 trillion, that is the debt that's held by the public. Okay, so yes, it's China, it's Japan, it's a whole bunch of other countries have a lot of this debt, and we count on them to buy our debt. And right now, with what's been happening, we've been alienating a lot of those governments and countries that actually buy our debt at a time when we're going to issue a whole bunch of debt. It's a very precarious position, but a lot of that is debt that's owned by the public. So it typically is always the public that takes the biggest hit. And China and Japan, I showed you that. I can show you again. But China and Japan have actually been reducing their holdings of our government debt since 2013. Since 2013. So there, you could constitute that as a run on the dollar, just like foreign governments sending in dollars in exchange for gold in the run up to us going off the gold standard. This was in the 60s until 1971. I believe we are already seeing that run. It's dangerous. And Savannah A asks, are we going to be okay? Why is the president not thinking about the working class and prices of all goods and services? I'm losing it. Okay. First of all, if you can build your local community, you're gonna be okay. If you set up a sound money foundation and you put in some gardens or you have some long storage food, remember it's security in food, water, energy, security itself, barterability, which for me is primarily silver, but honestly, any skill that you have or any tangible asset that you have is monetary. It's barterable, right? So if you're not in a position to load up on gold and silver, although there's always a way to do, you know what our minimum is? Our minimum is $1 silver dollar. $1 silver dollar. Why? Because every single person needs to have some sound money. But I want you to understand that there are lots of ways that you can accumulate that. So I would say, honestly, community is the most important thing that you can focus on, even if you can accumulate all the rest. Go to a farmer's market, meet the people that are creating your food. If you live in a large city, go to a community garden. In both cases, volunteer. Those people will have more of a like mind to you and they'll be more understanding. But when push comes to shove, you're going to get the eggs from the chickens that were produced at that local community garden. Last week, they didn't document this, unfortunately, but last week, I don't know quite how many dozens of eggs we were able to bring in for our office. 10 dozen? Mm-hmm. But we were able to bring in 10 dozen eggs. And we got to share it with whoever I guess was first in line. Okay. What? Oh, you do? Okay. So yeah. And it's because I have some backyard chickens. That's all. Backyard chickens and chicken eggs, duck eggs too, are a really good protein. So if you had to live on chicken eggs and you've got a couple of, even sprouting seeds, right? I mean, broccoli sprouting seeds are so nutritionally dense. Boom, you're covered. Maybe you get bored of eating the same thing, but at least you can feed your children and your family. I'm telling you, this is so critically important. And Max and the Weimaraner, is Juliet in here? Or did she leave?
I think she's.
She left. She snuck out. How'd she do that? She's awfully big. Oh, well, and friends, I hear you say be your own central banker. How does that work? What does it look like? You execute the sound money strategy at Zang Enterprises, right? And what you do is you convert a certain percentage or a certain level of your holdings. Silver for me is based upon your current cost of living and the fundamental value of silver. Okay, so how much silver do I need to sustain my standard of living and be able to buy food, the same food that I could buy to feed my family? And you want a variety of sizes. So this is a pre-64 dime rather, and this is an ounce. You can see the difference in sizes. And that's how you do it. You accumulate physical metals and you become your own central bank. And if you call us, we'll walk you through all of it. We like educated clients. And I also want you to understand, for us, this is long term. It isn't just we slap you in something and say, good luck to you. We walk you through all of it. A big part of it is right here on this channel. So just keep coming back, even if you don't do business with us. Keep coming back because I'm going to let you know what I'm doing for myself. And at some point, we will have that new channel up to get more specific on how you deal with the mantra. I promise you, we're working on it. It's very hard to do it. It's very complicated with all the moving parts, but we are working on it. So in any of those mantra areas, let us know how we can help, right? Because we're happy to do that. But that's what it looks like. Like, I'm not worried about anything because I've been accumulating gold and silver for a very long time. I had a little bit before 2002, but since 2002, that's really when I seriously started accumulating because I got the technical signals that this was the end of the fiat money system. Now, that was back in 2002. Here we are 24 years later, 23, 24 years later, and you go, oh, Lynette. But I'm going to tell you, I was able to get things then that I can't get now. They're just off the market because it's physical. And if you wait, that's what's going to happen. So there's gold and then there's gold. There's silver and then there's silver. So it's all broken down, and we're really happy to help you understand what it's for. But being your own central bank means that if the government's look at what happened in Canada with the peaceful trucker strike, right? They didn't like what they were doing. Boom, they were cut out of the system. Well, anybody that donated them, boom, they were cut out of the system. If those people had gold or silver outside of the system, they could have still managed just fine. Might have been a little inconvenient, but 100% of the time, you can convert your gold into silver, into whatever currency, wherever you are in the world. So that's what it looks like. The sound money strategy, that's what it looks like. But you need that community piece too. Critically important. And Richard...
And I just want to say sorry real quickly.
Yeah.
Kenneth is in the chat with us today. So hey,
hi, Kenneth.
Kenneth. Happy to have you here. Southern Yankee Prepper, I think we answered your question for you. Yes, we do sell gold and silver.
Yes, we do.
It is absolutely free to give us a call and talk about the strategy that we have.
Yes.
I think you said you found the number, but we're putting it up for you just in case. Again, appreciate you being in the chat. And yeah, give us a call.
Absolutely. And, Kenneth happens to be one of our strategy specialists, and I had a meeting with him yesterday, a one-on-one. So we had actually a couple meetings yesterday. But I want you to know that if you're talking to them, you're actually talking to me. They know how to get a hold of me. They see me every single week. And we have not just group conversations, which are phenomenal, but we also have one-on-one conversations so we can get as specific as we need to. And that's what I really do want you to understand, that we are a community and we're inviting you to join our community.
Also, shout out to Wolf. They're one of our customers. So they're saying, giving advice. Hey, really appreciate all the kind words.
Thank you so much.
We're here to be of service to you. So.
Yep. I mean, who do you think I work for? I work for you guys, period. I've always worked for you guys because this is why I was put on this planet. So it's really, really important. And okay, Richard Wizardry asks, will a day come that a quantum computer breaks all encryption that wasn't created for quantum computers? It will crash it all? I could easily see that. I mean, technology speeds up. My grandfather was 99 when he passed, and he was born in 1875. And I used to go and see him. I adored that man, absolutely adored. Best stories ever. But I was always amazed at what he saw in his lifetime, because being born in 1875, he saw the car being born, electricity, telephones in your house. I mean, all of these major changes. Well, now I'm 70 and I'm looking back on the changes that I've seen in my lifetime, and the technology speeds all of that up. So yes, I definitely can see that there will come a time when quantum computers will break all encryption. We'll have to have another new system. It will continue to ratchet up and up and up. That's why having that foundation in sound money is really critical. And being prepared is really critical. It was funny. I did an in-person interview today, and she was like asking me about what it was like to be a prepper, because the public's view of what a prepper is kind of this was her words, not mine, but a kind of a backwoods kind of person, not very smart or intelligent and not really knowledgeable about things. Well, I beg to differ. I became a prepper because of all of the work that I did on the economy, and my work as an economist, and my work understanding currencies and currency life cycles. So, That's why 100% of the time you should have a foundation of sound money. What varies is dependent upon where we are in this trend cycle would determine if you're holding other things. Like for me, it's all about the mantra, and I don't own any stocks or bonds or cryptocurrencies at this time. That has not always been true. The cryptocurrency part has been true. I haven't bought one. But I don't think that that's going to be true into the future, right? I just want to get to safety now when we are so fragile and so vulnerable. And question? Next question. Okay, low blood pressure. By the way, thank you guys for showing up, because I know you have choices and I know that this is your time, and the time is such a precious commodity. So thank you for helping us build this channel and being part of this community. I really, really appreciate it. Okay, low blood pressure. What do you think of gold-backed 50-year treasuries? I say caca. That is my granddaughter's favorite emoji, is the poop emoji. Gold back a 50-year treasury. Does that mean that they're going to pay it? And unless you can actually convert it into the gold, and so at the end of the 50 years, they give you the ounces of gold. This is like a gold contract. All right, I'm going to back up here for a minute, because this should be something that if you are a landlord in any way, that you should put into your contracts, which is a gold clause, which were standard at the turn of the century. So we're going to charge you this much in terms of dollars, or that equates out to this much in terms of gold. You get to determine whether or not you execute that gold clause, but what that does is it makes sure that you are always fairly paid for your lease if you're renting it out. So when I'm talking, I do want to make this point though. When I'm talking about the sound money strategy, I've done that for businesses as well. So if you have a business or you're generating your income in any way, the sound money strategy is part of what you should at the minimum take a look at to make an educated decision. But I would only say that a gold-backed treasury would make sense if they were paying me out in gold in 50 years. And 50 years should also be transferable, and that they can't undo it. And I don't know about that. And a 50-year treasury. Let's have a 100-year mortgage. I mean, you know, why not? They're talking about something like that in England right now, where they say, you know, home buyers weren't supposed to be in serfdom or something like that. My words are probably not quite what I've seen. But you pay the price for it, but you never, ever, ever own the house. And the reality is, property taxes, do you really ever own anything outright anyway? Part of the strategy is ensuring you can always pay the property taxes. I happen to like foreign gold coins or fractional gold coins for that, because it'll maintain your ability to always be able to pay those property taxes. So yeah, no. And Jason Warner asks, where is your number for me to buy gold and silver from you? There you go, 833-GLD-ZANG. Easy to remember, right? So thank you, Jason. I appreciate that. And Clear Skies asks, when I go to PCGS to check the value of my graded coins, there are two different values. What are these values, and which applies to my collectibles when I want to sell? The gold coins you encourage us to buy have languished. They have not gone up like bullion. My bullion has doubled while I am barely breaking even on collectibles bought at the same time. First of all, I'm not sure who you bought them from, because that's not actually what we're finding. But I will say this. Here's the difference between the two. I'm going to take each part of this one at a time, because there's a lot of stuff in there. So when you go to PCGS, you're going to see the value of those coins. Those are closer to a wholesale value. And when you see those two prices, it is most likely, since I didn't create this, I can't tell you specifically, between sight seen and sight unseen. Now, sight seen and sight unseen doesn't mean, oh, I saw the coin. Oh, look at this. It's sight seen. No, what that means is that it can be the same exact MS number, mint state number, but it will be sight unseen will be blemished in a different way that is only suitable for wholesale, not retail. We only work with sight seen coins. So on PCGS, it's closer to a wholesale price, and that's the values. What are these values? Okay, and when you want to sell, okay. So that part depends on who you bought them from. Like we have our wholesaler, and you bought it from ITM?
Yeah.
Call me. No. Okay.
I'm sorry. Bought it from ITM when you were there. Sorry.
Oh, okay. I'd have to look at that portfolio. Have we reviewed that portfolio at Zang Enterprises? Because we'll happily do that. And I will also tell you that was one of the very first things that I checked with when we were putting together our wholesalers, is because if you didn't buy it from ITM, they were not buying it back from you. So that was important to me, that we had that ability to do it. And we do have the ability to do it. So I'll tell you what, have whoever it is that you talk to me. I will look at it. We will look at it, and then we'll get back to you and make sure that you understand everything. Because I'm seeing the price of the collectibles. Don't go away. I haven't finished yet. I'm seeing the price of the collectibles going up actually reasonably substantially. And at the end of the day, particularly when that is likely to be the only way that you can buy it, because this is raw. Here's your bullion. I want to have the assurance that it cannot be confiscated. Have you looked at any of those yet? Have any of you guys looked at the videos that I've done on part 1, 2, and 3 has already been published, right? All 3 of those. Yeah. There's more coming, but 3 pieces of those have already been published. And I'd like some feedback on that if I need to clarify or do anything else with it. And I think you have at least one more installment, probably 2 more installments on the confiscation, because it's such a big subject. This bullion you can hold inside of an IRA, so I avoid it. And I'm patient, but I let me look at your portfolio, because I'm not looking at it, so I don't understand it. Kind of depends on when you bought it. If you bought it back in 2008, the last time I checked, they haven't recouped those. But if you bought it in I'd have to look at the chart, so don't hold me to this date. If you bought it in 2015 or 16, they're up pretty substantially. So I will look at it and we'll get back. They've not got my bullion has doubled while I am barely breaking even. Yeah. So that can happen, but what are you going to do? Are you going to convert this back into dollars? Because let me tell you, by the time you're going to convert this back into dollars, it's because you're going to convert it into income producing assets. And it's going to be very different, because historically, the way these coins perform, they totally outperform this stuff. They do. I've shown you that. I'll show you more of it. We'll go over it so that you understand it. But
definitely give us a call. Work with one of our strategy specialists.
Absolutely.
And we'll connect you with Lynette so that we can look at this. And yeah, absolutely. They said thank you for your response. So I just want to make sure.
Absolutely.
Yeah, we're here to be of service to you, of course.
We are here to be of service. And I'm not ever going to shy away from any question that you ask. None. That's my job. You may not like my answer sometimes, but I have to tell you what I see. And guess what? You get to make your own choices. Okay. Live free. Is silver and gold part of Trump's 25% tariff? If so, will the prices on the COMEX go up 25%? Won't the entities with the short on COMEX go bye-bye per se? Okay, so that has not yet been determined. But we're already seeing a squeeze, even though I don't really think it's fully apparent yet, between the physical market because they've shipped over so much from London. So would the prices go up 25%? Well, they've already gone up on the spot market. The reason why I sigh is because other than how you feel about it, I couldn't care less about the spot market. It's not reflective. We were taught that the markets are going to show us what's actually happening in the real economy and give you real price discovery, but they've been turned over and converted into a full trading. Everything we do, the food we eat, the energy we use, everything has been turned into a trading product. So that's why when you ask me about the spot, and sometimes I hesitate because I know it's garbage. But yeah, the spot market has definitely responded to it. Why you see spot gold up above $2,900 an ounce. Will it go up more if those tariffs go into play? Probably. But you see, if it's a raw good that comes into it, it's going to impact a whole lot more than that. So if he does put a tariff on gold and silver, remember, these are used in every single sector of the global economy. So I don't know that it would be quite as obvious as that, though it certainly could be, but it's going to impact everything that we buy if he puts a tariff on this. And this is money, right? Money should not be taxed. They just don't want you to realize that this is money. But yeah, if he puts the 25% tariff and what he said today, where the tariffs on Canada and Mexico were going in force, and I didn't have a chance to read more deeply into it, but he said something about doubling the tariffs to 50%.
50%, correct, on all steel, aluminum, all that. Yeah. Mm-hmm.
I mean, is the system unfair the way it's set up? Absolutely it is. Is this the way to go about making it fair? Okay, I guess that's up for debate. Some people might think yes, some people might think no. Either way, what we've got brewing is World War III. And President Trump has definitely threatened that more than once. I've seen him say World War III. So he's kind of telling you what's really happening, and alliances are changing. A lot of things are changing, and we live in the most interesting times. I'm very glad that I'm alive now, but I'm also really glad I'm old. To be honest with you, I'm really glad I'm old. I know that seems funny, but I've never seen, in all the years that I've been in these markets, I have never seen anything like this before, because I've never really witnessed the absolute end of a grand experiment like this. This is 110 years, 112-year experiment that's ending. That's a big deal. And Miramar asks, to the limit of my understanding, the value of these is based on digital entry in a digital ledger. What is the actual value of these cryptos based on? Selling out while the numbers are high. That's the thing. The other thing is that these cryptocurrencies use a tremendous amount of energy. Now look, it takes energy to pull this out of the ground and to pull this out of the ground. This is a byproduct. Silver is a byproduct. But it takes a lot of energy. However, that energy is now stored in these coins and then used in all those different sectors. So, and guess what? Gold is recoverable. Silver is not, but gold is recoverable. So that means that that energy can be used over and over and over and over again. The cryptocurrencies like, Bitcoin or any of them, they use the energy and they use it up. It is not stored. It is used in one place. And great. The value of these are based on what? Supply and demand. One place. Narrow base of buyer. But they're creating a new system to transfer you into. It was really interesting as I've been doing my research for the confiscation piece and the laws and all of that. I was reading some some work from the IMF, the International Monetary Fund, and they brought the special drawings rights, the SDR, which personally I think is going to be the world reserve currency eventually. But they brought that out in 1969, and they brought that out as paper gold to support the reserves of the countries, not real gold, paper gold. And what is this called? Digital gold. Well, let's see. We've lost about 97% or more of the purchasing power since we went off that gold standard. So how has the SDR as paper gold worked for you? It hasn't. And how will this work for you as digital gold? It'll work for some, but not likely for you or me. So good. Thank you.
You said experiment. Meng Tongfu is asking, why do you define the American decline as an experiment?
Okay. What I define as an experiment was coming into 1913. That was the very first time historically when a central bank was given a lifetime charter, and also it was the first time that central banks attempted to regulate the rate and speed of inflation. Prior to that, they had a 15-year charter because they knew darn well that they were probably going to inflate the currency. So fractional reserve, pretty easy to lie. If you don't hold it, you don't own it. And they can sell it over and over and over again and have you not even realize that. But the experiment was having a perpetual central bank and regulating the rate and speed of inflation by using interest rates. And that's also one of the reasons why I say we're at the very end, because if you look at that purchasing power chart, what do we know? We know we're near zero, right? So there's no purchasing power left for them to inflate away. And I'll tell you something that a lot of people might say, oh, Lynette, you're just crazy. But I will tell you, we will see negative rates back in this country, in the world, because once they get all the purchasing power, what do they have left? They have to attack principal. And that's what negative rates are about. And we have a video coming out on that on, what day is that? Saturday. So you definitely want to be aware of that. And
just real quickly, because there's a little tiny gap that I have here, understanding.
Okay.
So the charter, right? Mm-hmm. The charter was the freedom to kind of do whatever they wanted. Is that correct?
Well, I don't know that I would call that the charter for doing whatever they wanted.
Okay.
I would say that it's what legalized a central system to manage the money supply. Okay. So they've had that forever. There have been central banks around for hundreds of years, right?
Yes.
Right. But they would typically only be allowed to live for 15 to 20 years. The Federal Reserve was granted originally a 20-year charter. And what year was that? 1913. I mean, is that a coincidence? I don't know. I believe it was 1927 or might have been 28, but I think it was 27 when they were granted a perpetual charter. First central bank ever to be granted a perpetual charter. Yeah. Well, I mean, why not? And Southern Yankee Prepper asks, just curious, since I'm somewhat new to this channel, what is the setup appointment for? To have a meeting with our strategy specialists where they will have a conversation so they can answer all your questions. And if you're wanting to set up a strategy, then it's based upon whatever your current circumstances are and what your goals are and what you have to work with. So it's customized. I mean, basically you'd be executing the same strategy as me, but that's what the appointment is for. Or if you're wanting to position in and buy gold and silver, well, that's what funds all the other work that we do on your behalf. Because I am working diligently with the Sound Money Movement Advisory Board to get gold and silver legalized state by state by state so that we can pressure the federal government. And hopefully that's what I want on a global basis. I want gold and silver, but especially gold, to be part of the new currency system. So that's what that's for.
And setting an appointment is free.
Yes.
You can call
Yes.
us and just talk to us for free.
Absolutely. Absolutely. And Tommy says, been watching your content for years. Thank you very much, Tommy. Got my gold, yay, silver, and land in Cornwall, UK. I love Cornwall. It's gorgeous there. Oh, and guns and ammo. Thank you so much. Yay, and don't you feel better? You don't have to feel anxious because of everything that's going on, right? And so for those that are nervous and those that are feeling anxiety, how do you eat an elephant? One bite at a time. And sometimes because of all of the chaos, we just get locked, right? And a confused mind goes blank and we don't do anything. But you have to understand that not doing anything is also a choice. So if you want to alleviate your anxiety, you take the first step. Call us. We'll hold your hand. We'll walk you through it. We'll help you every step of the way, on the way in, while you're holding it, and on the way out, because we have an exit strategy. And it's a good one, too. No use for a name says, is there any gold in Fort Knox? How about in England? Well, there very well could be gold in Fort Knox. What I'm questioning is the ownership of that gold in Fort Knox, because they like to say, well, I've looked and there's all the gold. Treasury Secretary Besant just said that the other day. Oh, yeah, there's all the gold in Fort Knox. But like I showed you on that, can we go back to this? Can we go back to this for a second?
Let me know when you're ready.
I'm ready.
There you go.
Okay, so this is central bank gold buying. And you can see when it's negative like this is the selling, maybe the leasing. I don't know if that really reflects all of the leasing, but there's all sorts of shenanigans. So let's go to, you asked me about the UK. Well, the Bank of England I do have a chart on how much gold they have. Not very much. They've gotten rid of most of their gold hoards. However, they are holding gold for other global central banks, of which they just shipped a ton of it over here. And then that was distributed to whoever was calling that contract, right? What happens if other central banks want to repatriate and bring their gold back to their country? Will the Bank of England have it? That's what I'm waiting to see. That's explosive. And if they say, okay, you can have it back and we need 9 months or 6 months or 12 months or whatever, it's because they don't have it. So it isn't, is the physical gold there as much as it is, where are the ownership documents and the leasing documents, who really owns it, right? That's a big part of that. And you can see where they were selling, right? During this whole period of time where the fiat money system they were just robbing you of your purchasing power this whole darn time. And now they're buying gold at the highest levels ever. What does that tell you? Tells you a lot.
It's all physical too, right?
Yeah.
Okay. They're not buying paper contracts.
No.
That would be...
No, they're manipulating paper contracts. And certainly Chase Bank and all of the bullion banks are helping with that. In this country, it's mostly just derivatives. In England or in Europe, it's more of a physical market. Right. And Joel Eichner asks, why do they represent Bitcoin with the gold coin and not a balloon that says Bitcoin? Good question, because they want you to think of this as digital gold. That's why even, our president referred to it as digital gold, just like they referred to the SDR as paper gold. There is no substitute for gold. They've tried many, many, many times, many, many, many things. They have never come up with a substitute for gold. And they're not this time either. That's why it's important for you to own it. And that's why, and not a balloon. And Wolf responded to Joel, it's psychological. They want you to liken crypto to gold. Absolutely. Thank you. Thank you. Let's have this conversation. I cannot wait to do this live. Soon, they say, and really, they are they are doing so much in our new offices right now. It's looking fabulous. We are supposed to be in there by May. Now, we're already in there in a different part that they'll be working on after we move into that first part. But once we get into that first part, that's when we can start doing the live events. So I don't know that we're going to exactly start in May, but at least that's when it becomes a much better option. And Agash Yaknik, and if I'm really butchering anybody's name, please, please, please forgive me. My local gold buyer shop offers cash at 95% spot gold and 90% spot silver. If we go into hyperinflation, would you think we would see those rates go upward of 100%? Well, I can tell you right now that we pay more than spot on the gold and the silver. But so I don't know what to say for that. But actually, when we go into hyperinflation, I think we will see it go exponential. And yeah, I think to be paid more than 100%, especially in demand and supply, this is when these things will fly, right? When this is basically the only way that you can buy gold. You think they're not going to confiscate? Maybe they won't. That's not it's not historic norm in this country. Gold's been confiscated 3 times. But even currently, with all of the royalty and the taxes. So, yeah, I think those rates would go like crazy, but I can't speak about your local gold buyer. I just know that what we do is we're only in physical, and it's supply and demand. And so what happens is there's always a premium. There's a premium when they buy it. There's a premium when they sell it. And it's smaller for different things, so it kind of varies. But it's based on supply and demand. And when they can't get something, but there's lots of demand for it, they pay a bigger and bigger and bigger premium. It's going to be a little different at a local coin shop, frankly, because they just don't have the same resources and access to selling. They're just sort of buying it for their shop and then selling it inside of their shop. Whereas we have, I'm not saying that this is good or bad or whatever. I'm just saying we have a lot broader market. We have a much broader market.
Low blood pressure says something kind of interesting. Lynette, whoever holds it owns it, especially in Fort Knox. I guess referring to, right, whoever owns it, right?
If we're holding it, then, and those leases, we have kind of seen some of that conversation on debt saying maybe these aren't so legitimate. And I've never seen an accounting on the ownership in Fort Knox. I've never seen an accounting on it that's hidden. Why is that hidden? I don't know. I'd feel a whole lot better if it wasn't so hidden. So I'm hoping that is something that comes out of this administration, to be honest with you. I would love to see that data. Love it. And Kathy Piscatello says, what do you think of the Trump's gold card $5 million? I don't think he's going to get a whole lot of takers. What do I think about it? I think it's discriminatory. That's what I think about it, right? Yeah. I mean, I'm second generation. Both of my parents were first generation born in the U.S. I mean, America is really a country of immigrants. It really is. It's a melting pot. Isn't that what they said? It's a melting pot. Give us you're hungry, you're tired, you're poor. And we need people at every single level to perform all of the functions that an economy needs to perform. So, yeah, I think it's discriminatory. Hair Tide said, with the spending power of the dollar going so low, what are the chances that banks will start calling in all the mortgage loans, forcing people to refinance at higher interest rates? Well, actually, I got to tell you, do you hear any of those bankers talk about the dollar and the end of the dollar and the end of this dollar system? No, they don't talk about it. Central banks buy gold because of it, but they don't want you to understand what is actually happening. So this is what happens, and I've done, maybe we can pull that link and put it in the there on what happens to real estate during these transitions. And there's a whole section on there, what actually happens to mortgages. So it's not going to happen, it's not likely, because I can't control anything anyway, but it's not likely to happen before we go into the hyperinflationary event. Then what is very likely to happen, because remember 2008 and all those people had to do restructured mortgages and all that so they didn't lose their house? Well, whose benefit do you think that was in? And oh, by the way, in this big, thick mortgage documents that you initial, because you want to buy the house, you didn't read the fine print. So they retain the right to change things. And what is likely to happen is that first they will attempt to change and your interest rates that you're paying on them, or push you into restructuring your loan with them. In the sound money strategy, that won't happen to you. Right? There are two dangers that real estate faces. One is that mortgage, because your interest rates are going to go sky high and you're never going to be able to own this because of the contract. But the other are your property taxes. So we account for both of those. And inside of your sound money strategy, we look at any of your fixed rate debt, all of your fixed rate debt, which is typically primarily, mortgages, but it's also in auto loans and things like that. And we put in there a component, how much gold do you need to pay off that mortgage when they do that overnight revaluation, and we see that ginormous spike as gold begins, not going to do it the first time, but begins to move to its fundamental value. That for me will be what might take me 10 ounces of gold. And honestly, I only have a mortgage right now because I want to execute the strategy with you. Otherwise, I would not have a mortgage. So you're going to liquidate a certain amount of gold and bam, pay that mortgage right off. It's not rocket science. It's just how it works. We know what the fundamental value of an ounce of gold is right now, and therefore we can determine, okay, if you have a $100,000 mortgage, this is how much gold you need with the current fundamental value to pay off that mortgage, right? This is how much fractional gold you need to be able to pay your property taxes so that you don't lose that house. Right? So that's part of the sound money strategy. Yeah. And Collie Fury says, what specifically ties silver to gold in the modern world? Well, I mean, primary currency metal, secondary currency metal. The reason why you see greater volatility in silver and tied, what you're talking about. So it's history that really ties it, but it's also the demand and the fact that they have not yet been able to, taking it more current, they have not yet been able to figure out, just like gold, the how to recreate all of the attributes of silver in there. So I think a lot of it is historic, the historic relationship, which people think, well, look, this is, if you could see this is a $1 gold coin, which had the same purchasing power value as this 1 ounce of silver, right? So secondary monetary metal, primary monetary metal. And just because time has gone by doesn't necessarily change everything. They just want us to think that this time is different. I have both, but honestly, my lion's share is right here. This is the lion's share of my portfolio. But I have the raw. I love the raw for barterability. I love all the sizes of silver for barterability. So you need both. For me, though, when you're sitting down, we take a look at what your current circumstances are And so then in your barterable portfolio, some of that will be barterable gold. Some of it, most of it probably will be barterable silver. But we have it all broken down very specifically. And what do I think about tokenization? Hi, Nicola. I love Italy. Where are you in Italy? I'm curious because I've been there 4 times over the course of my lifetime and probably will be going back again because I love it so much. Okay, tokenization, it's interesting. It's interesting because they would like to turn everything into tokens that can then be traded around the world. And so what then happens is you will be able to trade your equity, and somebody in Italy or somebody in China or somebody somewhere else in the world ends up owning the equity in your home or the equity in your assets. That's one of the reasons why you see the WEF say you will own nothing and be happy. You're not going to be happy, but you could end up spending it away. So for me, tokenization is about tracking it, and it's also about enabling it to be sold all around the world, globalizing the equity in everything that we do, and also controlling it for taxation purposes. Because governments are primarily interested in how they can tax you. And so you won't be able to really shield anything. I mean, I don't intend to tokenize any of my gold or silver or anything else. I'm not interested. But they're going to make sure that they can inspire you and entice you to turn all of your assets into tokenization. So I'm not a fan. I'm not a fan because I don't like the loss of privacy. I don't like the ability to track, and I don't really want somebody somewhere else to own my equity. I want to maintain my equity. And the easier it is for you to spend it, especially if it's on your phone. Oh, I see that boat. I think I'll buy that. I have lots of equity. And before you know it, you've spent it all and you're destitute. So yeah, that's how I feel about tokenization. I've done videos on that as well. I've actually been talking about it since 2015 was the first video that I did on that, which is when I started on the internet, even though I've been in the markets longer.
There was a question from our last video.
Okay.
And it was from Jeffrey Kolb. And I will go and comment on that saying, hey, we answered you in the live. Okay. So he knows. The question was, or the comment was, please expose the very high premium on gold backs. Expose it.
Expose it. You know, I don't have any gold backs here. We are working on getting them in. And yes, there is a high premium, but that artwork is, I mean, it's gorgeous. And here's the thing. I wouldn't put all of my wealth in gold backs, but I do see how it fits into the very first layered part of the strategy. There is going to be a premium because they have put that gold that's in those gold backs super duper thin, but it costs a lot of money to do that. And the artwork on them, they're gorgeous. They're spectacular. So that's what the premium is about, is they have to pay for all of these services. But on top of that, that's also why it's so critically important for you to know what the true value of any asset or any instrument is. Because I cannot give you a lot of guarantees, but I'll give you this one, and you can hold me to it. At some point, all assets, all instruments go to their fundamental value. So if you have a thousandth of an ounce of gold in a gold back, and right now, spot is like 29.17 or wherever it happens to be, but its true fundamental value is over 40,000, you'll make back those premiums, right? I never make a choice based purely on cost or premiums. I make a choice based on what am I trying to accomplish with it. It's kind of a nice way to be able to hold gold in a bill like you would hold $1. And they're working on building that infrastructure out so that you have more companies that you can use them with. And I know that's actually something that we're working on, that you'd be able to pay using gold backs and crypto. You know, some of the cryptocurrencies too. We're working on it. Don't hold me to anything.
So I got a follow up for you then. So let's just say
Okay.
I have $500, right? Do I buy a little bit of silver, some gold backs, a little bit? How would you even disperse that? Is gold backs on your radar to purchase?
Depends.
Okay.
Okay. Everything always depends.
Sure.
What is it that you're trying to accomplish? If you have $500, then I would probably do something more like your barterable silver portfolio, to be honest with you. Mm-hmm. But having said that, and maybe even, I don't know. There might be some fractional gold that you could do a little bit of both. I'm not really sure about that because I don't have any pricing in front of me. But I'm sitting here and I'm telling you that I can see where it could fit for a small portion, the cash portion of your strategy. I can see where it fits.
Thank you.
And this is the last question. From your backyard, I have about 17,000 in pre-33 that has not grown in value over 2 years. Would you sell and rebuy or hold? Purchased with ITM. I would not be liquidating that at all. I would call us to see where it fits in your portfolio so that you have a better vision of what you have laid in and where your holes are. I find it in the last 2 years, I'm really finding it challenging that it hasn't moved at all because that's not what I'm seeing. However, call us and we'll make sure, we'll let you know where you are, but I would not be liquidating, and I'm telling you right now, because it is so severely below the fundamental value. Why liquidate it and rebuy it, right? Why do that? You paid a premium to buy it, paid the fees, and it's still severely undervalued. And I promise you, that you will be in very good shape with them. Absolutely. It's the only thing that I personally buy. I mean, I do buy the raw because it depends on what I'm trying to accomplish. But if you've got the slabbed, first of all, let's see where it fits in your portfolio. And let's make sure that it really hasn't moved in 2 years. I really find that challenging to believe because that's not what I'm seeing when I'm looking. But they might not have the software that updates it or what have you. No, hold, but know what it is supposed to accomplish. Know its function so that you can make sure that whatever else you're going to do actually supports what you're trying to do. So this was a good one, and I'm so glad that it went this long. It's fabulous. And I love the comments. Let's try and do more of them. So if you guys are out there and you see something, jot it down, or you have a thought on something, jot it down. Let's try and make these more of a conversation than just on the Lynette show. Let's make it our show. Let's make it our community where we can bring issues, thoughts, questions, ideas, and really help each other. And I know we're making a positive difference, and that makes me so happy when you share that. And until next we meet, please be safe out there. Bye-bye.